And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Tuesday, September the 6th, Synthetic Monday due to the holiday yesterday. Hope you had a good holiday weekend. I had a wedding this weekend, and it was one of those kind of 3-day long weddings. Lots of people and friends from out of town to entertain. So a very active, very busy weekend for me. Hopefully did get some rest. I know I tried to get a little bit of rest yesterday, and I'm ready for the trading day today. As always, our focus is on finding accurate context, good risk management, and remaining patient in our trading, not to mention creative. It's National Read a Book Day. I can recommend one for you. Our good friend Anne Marie Band has a book out called The Trading Book. It's an excellent book, a complete solution to mastering technical systems and trading psychology. Go ahead and get that book. And, you know, as always, we're looking into the economic numbers this morning. We've got a very slow week as far as economic numbers are concerned. Today we have some ISM services indexes at 9 o'clock, but that's just going to be about it. So not a lot of economic information. I see on my calendar here on Wednesday, we do have the beige book, which means it's 2 weeks to the next Fed meeting. So we'll be looking forward to seeing what they have to do on the next Fed meeting. Of course, there are a lot of talking Feds. U.S. stocks are ready to open higher this week on Tuesday. After yesterday's abbreviated session, very low economic numbers, nothing really important as far as earnings are concerned, unless you're following Bed Bath & Beyond, and GameStop do have their earnings. GameStop has their earnings this week, so that's one that I'm sure a lot of folks will be kind of focusing on. But there is a lot of Fed speak this week. Just to kind of go over who is talking, nobody today that I see on my calendar, but tomorrow, 3 different talking Feds. Powell speaks on Thursday with a couple of other talking Feds and a couple of more talking Feds on Friday. So a lot of focus will be on what they have to say. I don't think I introduced myself. I'm John Hoagland. Thanks for trusting me with your time. Crude, we've seen crude prices remain near support levels so far this week, ignoring OPEC Plus's output cuts 1 month after the agreement to increase output. Yesterday was a non-settlement day. So we're basing all settlements off of the close on Friday. These days always tend to freak me out a little bit, because on certain platforms, because yesterday was a non-settlement day, they use the same bar today as they did yesterday. They just continue yesterday's activity on the same bar. The platform we're using, TS Trader, does not do that. I don't think Ninja Trader does that. CTS-T4 does do that. So it tends to freak me out a little bit when I'm looking at these charts. Got to be careful on days like this, because it's just unusual, and anything unusual, being a caveman myself, it frightens and confuses me. So I'm going to be keeping an eye on that. That's going to be part of my context today, is remembering, okay, settlement is from Friday. Not a lot of volume in any of these markets yesterday. Very small ranges, as we would have expected. We're going to be picking up today based off of, I think, more of Friday's information than any information that was provided for us by the markets yesterday. One last thing. What do you guys think of the rules restriction lifting? We no longer are going to have a weekly loss limit. You are also no longer going to be required to be flat during economic releases. There's a big announcement this weekend, and hopefully we're all pleased with that. The thing that concerns me the most is the ability to hold positions into economic releases. It reminds me of Jurassic Park when Jeff Goldblum says, yeah, they were so concerned about whether or not they could, they didn't ask whether or not they should. Give careful consideration to holding any positions into economic releases. I've seen people immediately wiped out on situations like that. So just be careful. It's up to you. Be responsible for your activities, and I've been around the block a few times here. I've held some positions into economic numbers. I've had wildly successful days, and I've had absolutely disastrous days. If I add up the winnings and losses of all of those times when I held positions into economic releases, I come to about zero. So other than creating a lot of gray hair and losing a lot of hair on those particular days, I haven't found any way to find consistent profitability. So I choose not to hold positions into economic releases. If I do, it's a rare occasion when I'm already so in the money on the trade. It seems as though it can't lose. But of course, we all know that is not true. When they tell you it can't go to zero, remember the May expiration in crude oil about 3-4 years ago? It went to negative 40. So when they tell you it can't go to zero, tell them yes, it can. All right. VIX, actually a little bit higher this morning. Kind of surprised by that. 25.60. Dollar index up slightly at, wait a minute, I got it written down wrong here. Dollar index, 109.92 last I checked, and the yield on the 10-year 3.26%. So I think Friday was 3.25%. So still continuing to leak to the upside. Good morning, everyone. Shaw, it's good to see you this morning. You win the prize this morning. Theo, my brother Tom, good to see you. Love you. Dan Trader, Scott Saw, James, Dario, good morning, Ron, Federico, Charles, Serenity Trader, DA. It's going to be a good day for all of us. Joe Drinnen, good to see you. Mango Heist, Orion, good to see you. Terrence King, Jules, Bill Phillips. Bill's taking a break, heading to Chicago for his school reunion. Well, that's going to be that should be fun. Bill, I have never gone to one of my school reunions. Maybe I should try and do that one of these days. We're getting up there in decades since I graduated. But enjoy, Bill. It's always fun. George Duke, good to see you. Dead letter opener, Vince, my guy, good to see you. Tanya, Alfred, Clarence, Dark Kevin. Yes, let's go. I hope your long weekend was good as well. David, Rusty Golfer, my spirit animal, Unicus, with his quote for the day. Love these, Unicus. Any trader can take risk. A great trader can do it with purpose and use it to their advantage. Great quote. Thank you again for those, Unicus. Really enjoy those. John Hukel, Dead Letter Opener. Good to see you. Tom, how weird is a book out? The Best Loser Wins. I've heard of that book. I'm going to have to get that one. Trading Research. Good morning, Rob T. DK. Dead Letter Opener. Great to see the usual faces. Ape, ape, ape. Go ape. The Talking Feds. The Serenity Trader. Yeah, we got lots of those. I got a talking dog over here moosing me so that I can pet her. I don't know when my book's going to come out, although I feel like I've written a few of them. Trading View does that. Ninja Trader does not. Got it. Yeah, so remember, yesterday was a non-settlement day. We're still looking at Friday's settlement for where we're basing margins. That can make a difference. It always just freaks me out a little bit. Marcelo, good morning. DA. I'm using all levels in reference from Friday and consider yesterday a footbridge. between Sunday night trade and last night's Globex. In other words, it's all similar to overnight. I agree with that trading research. When you look at the volume, and we'll look at that very shortly on the charts, it's very low volume, very low volume. Brody, Frederico, Jan R. Hegel Matters, good morning. Tiza, Dr. VJ, good to see you. News rule, already if well positioned. Exactly, right? Don't mistake this removal of loss limit for the daily or the bottom line loss limit. No, it is only the weekly loss limit that was removed. Thumbs up for the rule changes. Good morning, Jan R. We had a few folks earn funded accounts yesterday. Kenneth K, Shaotsu W, Shin H, Sao C, Nitin D, Ren Z, Yosef N, Gao Chen. Congratulations to all of you. Antonio L, John B, Elizabeth D, and Chen B, all earning funded accounts yesterday during that small little range. Congratulations. All right. It is Make Hogue Money Day. Here's the link so you can get into the link to get into Make Hogue Money. Hopefully you're going to be joining us today, and hopefully you'll make me some money. There's the link. We're going to jump into the charts so we can get to Make Hogue Money in due time here. Good morning, Patrick. All right, so let's start with the daily in the S&Ps and see what we see. Again, non-settlement day yesterday. Make sure you're aware that whether your platform treats yesterday as its own bar on the daily chart. So, S&Ps. Well, we had a measured move from the bottom of the neckline from this head and shoulders that we achieved on Friday, Thursday and Friday, actually. That's kind of turned into a little bit of a support level here. We're starting to form a little bit of balance here, and this is an important level for us to do so because this day here, which was the 19th of July, was the day we started to notice a little bit of a paradigm shift in the market. We saw that we had a big boost in open interest on an up day, which we had not seen in some time. So we were looking for that continuation to the upside, which we got. We broke that. We're back down to that level where those buyers came in and accumulated those longs. Longer time frame traders, they're not that worried about what are, the daily movement of markets. And if they decide they're going to protect this level, we may run into some buyers down here. Of course, all of this is contingent on the news and anything else that may happen. David, a B profile means long liquidation. Long liquidation. If you see a drop in open interest after a B profile, that confirms a long liquidation type of profile. All right. So just kind of watching this area here, this area of balance, supportive for price. So far, we lost about 6,400 in open interest on Friday with somewhat of a B-shaped profile. It was a double distribution trend day, an area of balance up here and a new area of balance down here. We have settlement here, which is 39.2450 again from Friday. We're holding some overnight longs here. We're looking at the information from Friday more than what we're looking at here. Look at the volume yesterday in the regular trading hour session. Just the same as it is in the overnight session. Just nothing going on. No big participants. And, that's something that we got to be aware of. So all of this equates to basically one long overnight. And we are holding some longs, but we are in range. We are in value. We had a double distribution trend day. We're opening between the high volume node down here and our volume point of control up here, which is the high volume node up here. It would kind of bode for some degree of repair. This, however, is a very large range. We've got a kind of a high volume node here. We've got another one here. We've got another one here. Lots of repair possibly. And with no economic information and with no unknown news coming out, what is it that this market has a tendency to do? It has a tendency to drift to the upside. If there's no bad news, the market has that tendency to kind of grind on shorts and kind of push price higher. We don't know what's going to happen, of course. And because we are opening in range and in value, I'm going to try and stay patient. I'm going to be looking for opportunities as the day goes on, which is going to be fun because we're going to be in make whole money when the S&P's open, and we're usually thinking about doing the opening range trade. If it works, if it doesn't, it's fine. We'll decide that when we get there. But again, I'm going to try and stay patient. We've got some higher lows. We've got some higher highs here. It does seem as though the market might be primed to come up here and start to repair some of these holes here from Friday. Take a look at the crude oil now. Crude. Basically, we've been very range bound for a couple, 3 months. The weekly kickoff low remains at 86.75 because we haven't really seen any acceptance down below that, and it remains kind of pivotal for us in the market in crude oil today. Okay, we added about 3,600 on Friday in open interest. Volume was relatively low. Volume has been kind of cutting off as we get closer to the support level down here. So I'm kind of looking at weekly kickoff low / last week's low. This area down here is a kind of a high target area. I think there's probably going to be some fish there. Take a look at the 30. Okay, just opening up with no gap, looking like, let's see what we've got for our opening range here. 64. So we got a 42 tick opening range that we've left at the low of the session. Left at the low of the session. Opening range left at the low of the session against support, against overnight inventory, perhaps maybe a little bit to the short side. We did open with a gap from yesterday's range, not from Friday's range. Although yesterday we did have some decent volume. It was in essence, almost a full trading day yesterday. So, looking at this area down here as a possible area to do some fishing, we opened and left it relatively quickly. As long as we leave that opening range at the low of the session, I'm going to be looking for opportunities to buy weakness in this market. The low of the opening range is 86.62. If you want to write that down, it's between weekly kickoff low and last week's low. Left the opening range at the low of the session. Buying pullbacks seems to make a little bit of sense. Right, NASDAQ. NASDAQ's a little bit of a different story as usual, just like the S&Ps, but different. We haven't quite gotten to our head and shoulders termination down here, which might be important information. What doesn't happen is sometimes as equal as to what does happen. We've taken the market, 1, 2, 3 points of contact. This was the breakout point on the day that we've been discussing as a paradigm shift in the marketplace. July 19th. We extended this trend line all the way down here, and look where it traded to on Thursday and Friday. Basically just finding support back at that level, back in that same range of the day that we saw the open interest start to turn to the upside. Again, I thinking there may be some longer time frame traders kind of protecting this area. Any news, of course, can change that in a heartbeat, and as we always say, anything can happen. ACH. We had an open interest increase on Friday where we had a loss in the S&Ps. 7,100 estimated increase in open interest on Friday. That's some sellers coming in. That's some new shorts possibly coming in. And if those new shorts are shorter time frame or medium time frame traders, they may be a little stuck short in the hole here, especially if we have our longer time frame traders protecting this area. Let's take a look at the 30. Settlement 12,104 quarter. Put that on your charts. Again, similar situation, opening in an area that bodes for repair. We got a high volume node area here. We've got a high volume node here. Opening between them tends to create the opportunity for the market to just come in and fill in these holes that were left on Friday. It's going to be an interesting day today. I'm going to personally try and stay really patient because we're kind of opening in the value area of an imbalanced day that's part of a longer medium time frame area of balance. Gold is a fascinating but frustrating market lately. We've been watching this swing low here for possible support. Looks like we got to that level here on, what is that, Thursday, relatively close to it. We lost about 600 in open interest on that day, so maybe some long liquidation just kind of capitulating and getting out possibly at the wrong time. Open interest of minus 600 is somewhat inert in most markets, probably so in gold as well. Volume was okay. It's been holding up all right. What does this look like? I mean, if I had to complete this chart into the future, I would say, a W bottom, maybe? I don't know. You have to wait and see. It doesn't really help us in day trading. What does the 30-minute chart look like? In range, in value, we opened, seeming to be trying to push to the downside. We've got a naked point of control down here, which would be kind of a weakness level, and a level that would probably be good to recheck. Leaving the value from yesterday, leaving value from Friday. You know, try and stay patient. This market has been tough. Really thinking if I'm going to be looking for longs, I'd love to see this market come down here, check this naked point of control, set up some structure in the day time frame for a move in the opposite direction. Down below that, we've got last week's low, which is relatively close to that swing low that we were seeing on the daily chart. Seems in this position, we've got balance, central location. I'll be looking for better trade locations as the day goes on. Good morning, Rick. For the euro, you see the dollar continuing to put in recent highs. We put in another 52-week high in the dollar, so we're starting to see the euro continuing to move to the downside. On Friday, we lost about 4,900 in open interest. And open interest has been kind of waffling. It's up, down one day, down the next, up one day, down the next. Volume has been holding up relatively well. So far, our volume today is equal to what we did the entire session yesterday, or even if it was abbreviated. So volume was pretty low yesterday. We're going to beat that, of course, today. Last week's low I'm looking at is kind of a pivotal area as we look to break out of this area of balance, okay? When we have areas of balance, our rules are we fade the extremes, we buy low, and we sell high until something changes, until something proves wrong, or there's an acceptance outside of that area of balance, which we may be working on right now. It seems the volume is pretty good. We've got a measured move that takes us down to weekly kickoff low, which is 0.9720. And if we do accept below this level, I'm looking for the market to kind of look for a move down to that measured move area. Take a look at the 30-minute chart. So there's last week's low. Yesterday's activity, again, not very high volume, a little bit better volume, I would say, than even the U.S. equities, but still very low, small range. We've opened, we've left those ranges, we've left the area of balance potentially. We've got this little area of rejection down here, but if we continue to build volume and spend time down below last week's low, I believe that's going to be an acceptance of lower price, and I'll be looking to sell rallies. I'll be looking to sell strength as long as that dollar holds up. And to the 10-year. So we're still working on finding acceptance below this weekly kickoff low, which has been here for a couple, 3 weeks. Of course, we continue to see rates creeping higher as they're going to be for the next year to two. We lost 1,700 on this move on Friday to the upside. I think we were talking on Friday on the forecast, you're probably going to at some point run into some profit taking. You got a lot of shorts in this market that are holding money. I said if it were me, I would certainly be lightening up, and it looks like that's exactly what happened on Friday with the loss of open interest on the up move, the opposite move from the bigger picture. We lost open interest on the opposite move. That's profit taking. That's short covering. Yesterday, today, we're really getting, I think, kind of a treat because we're seeing price relatively close to testing the weekly kickoff low again. And I view that as a kind of an important area because it's been rejected before. It offers the opportunity to limit risk. And we are getting relatively close to it again here. Settlement from Friday, 116.21. Are we holding overnight shorts? You could say that we are. You could say that we are. I mean, the market opened here on Sunday night. We're trading down here now. So we are holding some shorts, calling them overnight shorts, even including yesterday's regular trading hour session, up against support. So if these overnight shorts, if these shorter time frame, weaker hands traders don't see any activity down below this important inflection level, there's always the opportunity to take this as a support level, use the shorts in short time frame against themselves, look for the long, and when they unravel towards settlement, you can take that ride. The closer we get to this important inflection level, the easier your risk is going to be on this opportunity. And natural gas, to getting a test of weekly kickoff low, we had an area of balance and indecision. It seems as though we're kind of getting a direction here. We lost 4,000 in open interest on Friday on this high volume day here. So no real money coming into any direction as of Friday. Yesterday, of course, very low volume. Today we're getting our look at weekly kickoff low, which can, of course, bring us an opportunity because it's going to give us the opportunity to limit risk. Look at the 30-minute chart here. Last week's low, finding sellers, weekly kickoff low, testing a previous naked point of control. Now we're down below it. If we spend time and build volume down here, that's going to be, it's going to be indicative of a healthy downside auction. And I think the world could use a little bit of cheaper natural gas. JD, natural gas is a beast. I've only taken 2 trades in it, and it scares me. Again, I'm a bit of a caveman, so sometimes these things frighten and confuse me. House of Kings Company joined yesterday during the trial. Welcome, House of Kings. Welcome to the market forecast as well. Good morning to you. Good morning, my brother Rick. Good to see you. All right. Possible to see. No, it's not just you, JD. Yeah, it is a tough market. So, all right. We got Make Coke Money. I'm going to get prepared for that and try and be in there close to 8:20 as I can. Looking forward to seeing everybody there. Need a couple of people to help make us our decisions, and we'll look forward to seeing everybody there. House of Kings. I like those crowns. Nice. All right. So let's take our deep breath. Stay humble, grateful, and creative today. Looking forward to seeing everybody and Make Coke Money. If I don't see you, trade well today. We'll see you back, I guess, here for the Coach's Playbook here at 11:30, and then back here again for the market recap at 3 o'clock. So get out there and profit today, everybody. Trade well, and looking forward to seeing everybody for Make Coke Money. We'll see you in a couple of minutes.